right, so today we've got Lynda Frink here. She is the CEO of Hopewell Chemical Federal Credit Union. You were just telling us you were here for how many years?
I've been here for 45 years. I've been CEO for 26 years. The credit union was started in '64 by my boss, and when we moved in here, he had passed, and the board took me on as the CEO. So I kind of grew up in this credit union.
Yeah. I know you always have so much wisdom to share. And
Thank you.
It's from the years and years, I'm sure, of helping the membership.
Yeah.
And unlike a lot of other financial institutions, y'all really care about the membership. I guess it's the old-fashioned credit union model.
Yes, it
right?
is. Yes, it is. And we're proud to say that.
Mm-hmm. And so I could not think of anybody better to talk to about, financial well-being, fitness, and how it fits into, what we like to call the wheel of life, a holistic life. And some of my past clients always mail out always had a lot of issues doing this initially, letter of the heart, about the different facets of life, right? Finances, yes. Spirituality, love life, work, personal, yourself, that type of thing. And my wheel's never perfect. And over the years, since we've been tracking, it's a very odd looking flat tire. But, it's expanding a little bit, right? And I guess when we get all the way out and fully expand, it's time to die. I don't know.
Exactly.
But we see a lot of situations right now where people just don't even know where to start. All of a sudden they're out of school and maybe have a job and don't understand how to spend money. So I'm sure you've seen people come in here and they've already gotten in trouble at that point, or
yes. Well, a lot come in here from the beginning and open their accounts. We're very proud of them, and we sit down with them, give them a budget, which they don't really know what to do with, but we talk it over with them, and they do real well. A few of those have. But then we have the ones that come in right after they've been out of school. They have debt from the school. They have gotten themselves into some credit card debt. So we try to sit down with them to help them get out of that and not have to go anywhere else to take legal actions. So our thing here is for you to be a well person, to be a whole person. And so we talk about what caused you to use your cards, what is continuing for you to use your cards. And then we start with the lowest balance card, and we try to get them to pay that off. And then they'll come back and get another one. Or if they have a little bit extra income, we'll even make them a secured loan where it'll be a much less interest rate and pay off 2 or 3 of the cards for them to pay that off while they're still working on the others and see their debt go down. That really excites them to start seeing their debt go down.
So it's kind of that snowball effect. You get those little wins, and you need to, like anything else, celebrate the small wins. And
That's exactly right.
What's the saying go? You eat an elephant one bite at a time.
That's correct.
Yeah,
and that's what we try to teach them to do. It does take time, and a lot of them are in a hurry because they want to buy a home or whatever that the world pressures them to get right away,
Yeah, and we see that on our end too, where people come in, their expectations might not be realistic, and they don't know where they're spending their money. And I know we've had some members here too, and you've helped establish credit, or they've never had any credit, so that secured credit card or secured loans, great. Or they're in trouble. So here's a great example: is we'll get somebody coming in, make great money, living in mom and dad's basement, want to buy a house. All of a sudden, we're going to have a $2,500 a month payment. But they haven't saved any money. How are they going to afford that that mortgage payment? And the light goes off.
Yes. We have some like that too, and I'll send them to you a lot of times to help. But we try to teach them to save. If that's what you want to do, sometimes you have to stay in your apartment or stay at your mom and dad's a little bit longer until you do save that money up for a home or a car, even, even a lesser purchase. But sometimes they don't need that car. So we talk to them about that. It's not all about making the loan here. It's about making you financially sound so you can afford those things later on in your life.
So you're looking for the long-term relationship, the long-term member, not the quick dollar. Well, I guess that's a credit union,
yes,
right?
Yes.
And I do it a little bit selfishly too, because so much of our business is on referrals and referrals of past clients. So you do the right thing, long term it's going to benefit.
That's
all
correct.
Parties, right?
And that's why we partnered with you. Because of that, Member Mortgage Solutions has been a great partner with us. Helped every single member, not always to buy the home, but to teach them what they need to do in their life so they are sound.
So when you're sitting down with people and going through their budget, do you ever have an aha moment where they finally realize like where the money's going?
We sure have.
So
yes.
that just going through that exercise itself.
Yes, which takes time. And we still take the time, so a lot of times we feel pressure in here because we do take the time, but it pays off in the end. Then you have a longtime member that's going to come back to you and ask you, what do you think about this? Or do you think I can afford this, even some of them say. So it's wonderful.
Yeah. And the advice on having some sort of, I'm a big proponent of not spending every dollar somebody has. Sometimes we end up doing that, because of the situation, every penny they have to get in that house, for several reasons. Obviously, when you buy a house, you're going to want to put furniture in it. You're going to have moving expenses. But, if something happens in life and you lose your job or you have an auto accident, water heater breaks, but if you physically have an issue that you're dealing with stress, to have the stress of the finances too is just
overwhelming.
Yeah, right.
Yes. We try to teach them, just like you said, to save a little bit of their money, so they will have money put up for those situations.
Yeah. And I know y'all help members too, especially like when some of your people are not working in the factories or the plants for strikes or whatever the purpose is. How do y'all handle those situations?
Yes, we do. We had a strike about 2 years ago, and we let members come in and defer a payment or do a skip-a-pays, what we call it, and we'll allow them a couple of skip-a-pays until they can get their feet back on the ground. Or we've even made disaster loans, and the board will say, we'll start them on this date and then we'll end them when the strike ends, or whatever disaster there is in the area. So we've done that for members too.
So what about personal disasters? Somebody goes through a tough time in life. I assume better for them to be on the offense and talk to their creditors than to just disappear.
Yes.
But being a small credit union, I'm assuming you give some sort of flexibility in those
Yes,
cases.
we do. We work with every member that walks in here. If they're willing to work at it, we're willing to work with them. Yes, we just had one gentleman that came in Friday. He's had a new baby. He has a baby that's 1 year old, something like that, and just had a new baby, and that they didn't expect. And he has a vehicle loan here, and he's paying $300 a month. Well, he came in and he's been paying on it for a couple of years. So he was saying, was there anything we could do for him? Well, we looked at everything, and he did not have a lot of credit card debt, but he was feeling the crunch for baby formula and diapers and all of that. But we got his payment down to $183 from $300. So that's going to help him tremendously. And his car's running well, so we felt comfortable to do that. So we did that for him Friday, and he was very thankful.
It's just little things. I think that's kind of what I get out of been doing this so long. It's not the financial benefit, it's hearing how you've helped people. And I remember running into a past client at a school event. It's like, yeah, I remember you. We were in such debt, and you helped us, kind of restructure things, and we got our life on track. And just want to say thank you.
That means everything. Yes, it does.
So what are some of the pitfalls you're seeing? Not necessarily just for the young crowd, but in general, people are doing with their finances. Well, things have gotten expensive.
A lot of our people make good money, okay? And sometimes the more money you make, the more money you spend, okay? So they fall into some of that because of new car prices are, high. To say the least, especially trucks. And our guys like trucks, they hunt, they fish, and they're expensive. So we see some of that happening in that area. A lot of credit card debt, though, that maybe one spouse got into that the other didn't. And then they come in, and then we have a problem there, because they haven't talked it out. They haven't saw what the problem is that caused the credit card debt, number one. So they get into a second mortgage, let's say, and pay off that debt. Maybe 2 years later they come in and it's there again.
So they kind of treated the symptom, but not the problem.
Yes.
And
Yes.
it's so interesting because I was listening the other day to a divorce attorney on a podcast, and he was clear to state that vast majority of divorces are not for infidelity, but for financial reasons. So people aren't having those conversations, aren't doing. And I had actually a realtor I worked with. I don't know how we got in this conversation about divorces, and she's like, yeah, her church made them go to pre-marriage classes and counseling, and finance is one of the things they brought up. So important.
That is important.
And for me, Debbie and I, yes, we always have one spender, one saver in every relationship. But all our accounts are joint, and I know we taught this before. I'm not seeing that as frequently as we used to. We always think of ourselves in life as one person, as a married couple, but I'm not sure that's the case for all folks.
No, it's not. And with this couple, we offered, to counsel you some on it, and we did a little bit. I talked to both of them, and I was telling them, you make good money. This was the gentleman, and she's paying all the bills, which, like you said, one is a little more saving than the other. But if you don't see what's going out every month, and he could have seen that much earlier if he'd have saw what was going out each month. He just required her to do it,
Right. Yeah. And we usually see that case. I don't want to be sexist or anything.
No.
But we see a lot of single guys who just kind of, they have the money, they decide just to be like paying it and got lazy. And so when they get married, all of a sudden the credit looks better, not because they're in any necessarily better financial shape, they have someone paying the bills.
That's
right?
correct. Well, it happens both ways. I've seen it both ways. So I just was saying about one person, but it happens both ways. And I say you both need to sit down and look at this every month, at least every other month. Because if you don't, things can crop up.
Right. And so, it just gets us thinking like finances are just one part of that circle, right? What other parts in life are also disconnected?
Yes. We have faith. Yeah. We have family life,
Yeah, it's interesting to see if they're the same way in other things. For some reason, finances have this tone nobody wants to talk about.
Exactly.
Which really shouldn't be.
No, it shouldn't. Yeah. No, it's very, very important. Like you said, it can cause a lot of divorces. And I do see that. I do see people crying when they come in. They're so upset. Hopefully we've helped them and settled them down before they leave. But it does take time to get out of those things, too.
I can think of one couple who we helped. Husband had just gone spending, actually went and got a P.O. box so his wife wouldn't see the bills come in. And it just got to the point where, and they sat down, had a heart-to-heart and figured out, had to hit some of the retirement accounts and so forth to get straight. But that marriage is as strong as can be now. So it's almost like it was breaking, and the fixed part, when the bone heals, is stronger than it was before it broke, but you got to fix the bone, right?
That's just a wonderful thing when you see that happen. Usually, 9 times out of 10, it does. Yeah. Every now and then you have the one person that doesn't want to cooperate, but you got to have both.
And we remember those.
Yes.
Yeah. And what do you see the impact of social media, because you've been doing this so long, has had on people's, what they think they should be doing and having?
Social media paints a beautiful picture of everybody. Nobody sees what's behind it at all. They don't see the struggles they have at night, or the talks they don't have with their spouse, or just being single and I can't have this, I want this, I think it has a lot to do with it, of what people are buying and getting themselves into. So we try to talk about that a little bit. I have the girls here that's way younger than me that can help them with those things too and talk to them about it. So
it's almost like, Debbie talking to me, it's like, do we really need that, right? What are you going to do, right? Just because you saw someone.
Exactly. Yeah, exactly. Luckily, there is usually one person in there that'll say that. It's me at home. My husband would buy everything, but not everything, but it's usually one person at home. And then when you hear that, you need to stop and think, do I need this?
Am I really going to use it?
Right. I am not an impulse buyer at all. It took me 3 years to buy my new car, okay? Because I just kept on until I looked and researched and everything. My husband found 10 cars during that time, okay? But we are both happy with the car we bought, and we're glad we waited, you know.
Well, you know, you
Yes.
can fall in that category of overthinking things
Yeah.
and not best use of time, but I get it.
Yeah, I do that sometimes. 3 years was a long
All
time.
guilty of that, right? You know, as long as the repair bills hadn't gotten very high on the old car, right?
Exactly. Yes.
So
That can happen, yes.
Definitely get that. All right, so let's say you've got somebody coming in, and occasionally I'll see, you know, parents like my kid. I want to help them buy a house, help them buy a car. Do you see much of that? The parents trying
Yeah,
to
we
help
do.
her?
We do.
Yeah.
And we do this. We'd have them co-sign the first time if they don't make enough money, or if they haven't been on their job long enough, or their credit score is not where it should be. And if it's really bad, we talk about that first and what you need to do to get your credit up, because I don't feel like putting them into something else if they're not paying their bills now. But if their credit's pretty small, or they don't have any at all, we'll let the parent go on the loan. And if they pay the first 12 months themselves, if we see them coming out of their account that they're paying the bill, then we'll release the parent if they come back in and want to be released.
So interesting, because you know, listening to that, what I find more often than not is the parents are almost always willing to help,
Yeah.
and the kids are afraid to ask. And again, it goes back to the conversation about money. So
Yes.
sometimes the parents need to offer and provide some guidance and have them come in and see you. So talking about parents, right, wanting to help, and I see the same thing with parents, you know, wanting to help the kids. And it's not always we have issues with needing a co-signer. It is we don't have funds for down payments, right?
Right. Correct.
And the kids may have been existing while they're paying outrageous amounts in rent. You know, I think I tell you, we're seeing rents at $4,000, $5,000, $6,000, $7,000 a month in some cases. So they're affording the rents, but they don't have the down payment funds, school debt, whatever. So parents oftentimes will be happy to gift them funds.
Yes.
And in most cases, there's really no tax consequences to that. So
Exactly.
that's important. But again, to have those conversations also leads me to where we see the elderly population, where you've got someone struggling to make because their income is fixed and they really don't have much opportunity for that to grow.
Right.
And this is where something that has a really bad reputation, reverse mortgages, actually are a good thing. And almost had the same budgeting conversation years ago with a couple, and he was sitting in my office and he's like, Paul, I never expected to live to this age, and so I'm not prepared.
Yeah.
And, you know, we literally got out because they're old. They use the check registers, and we went down and wrote down. And, you know, he was kind of shocked how much the beauty parlor was costing and the frequency.
Of course.
But they were in a difficult situation. They had a great house. They could age in it. That was all good. A small mortgage left on it, very small. But it's time for them to get a new car. And he had some health issues. Granted, living longer than he anticipated, and was in that donut hole with Medicare, right? You care for the
Okay,
elderly,
yes.
right? Okay. And had about a $600 a month bill for his drugs.
Wow.
Right? So that was kind of putting them over the edge, and car repairs. So we were able to do a reverse mortgage. We were able to do a couple things with that. One is to get rid of the existing mortgage. We pulled out about $25,000 for a used car that they wanted to buy at the time.
Great.
We were able to create an income stream where the mortgage pays you on a monthly basis
Okay.
to cover that $600, and they still had a line of credit available if they wanted to buy something for the grandkids.
That's
so that was the ultimate story.
Right.
But again, these were folks who came in struggling, and we were able to. And so now the rest of life was less stressful.
Oh, that's
Yeah.
wonderful.
Right.
Yeah, we do talk to several of our members about that and send them to you. You have helped a couple, and that's been a blessing to us because we want to see our elderly. They're the ones that built this credit union. It's theirs. So as we work in here and they know, they don't hear as well, I expect my employees to speak up, and just everything that they need, we want to be there for them. Yes, they still use registers. I have one in my pocket right now to take home tonight because he can't balance it, and I help him balance it every month if he can't. So that's what we do here. And yes, we have done some second mortgages so they can maybe fix their house a little bit, a bathroom or something that's happened, or buy a car.
Yeah.
We've done that too, and they've been very thankful.
And they're also frequently worried about leaving their house for their children.
Yes.
And the children are more concerned about them staying in their house. They don't really necessarily, need that wealth at that point in time, but they want to make sure the parents feel self-sufficient.
That's exactly what we're seeing.
Yeah. So,
yes, it's
so
beautiful.
Cool. But talking about wealth, right? So, we're always big on wealth, and wealth and richness and income are not always the same, because we've seen plenty of people make lots of income that are a financial mess. And we've seen people who don't make a lot of income who are in great financial shape, right?
That's exactly right. Balance is the word to me, okay? That we have to have a balance in every area of our life, which it's very hard to do. But balance is what gets us to have wealth. We feel peaceful when we have wealth. We don't have the anxieties. Yes, it make a lot of money, but if you spend a lot of your money, that doesn't mean because you have the best car, or best of everything, or either four-wheeler or whatever your kids are playing with these days, or a pool in your backyard, it doesn't mean that you're wealthy. If you have family problems, if you have elderly parents that you cannot help, things like that. So we need to take a look at our whole family, especially spiritually, faith-based, things like that, that'll give us peace if we can get our finances in order. But finances are a very important part of being in order.
And I think that maybe gotten lost with a lot of the larger institutions, right?
Yeah.
Is that they're not looking at the whole picture. They're looking at the transaction and not the holistic person. So what is your recommendation as far as having a safety cushion? We talked about somebody getting injured or hurt. I know I talk about this when I'm consulting clients, and I have my opinion. So what's your take?
We tell them at least 3 months of income. To have, and we try to start everybody off. Just say if they say they can't save, let's just save $20 per pay period right now. Let's see what happens. And then once we do that and they see it growing, you'd be surprised how quickly they bump it up. And
you will label this in like a separate sub account, so when they look at that receipt or their phone, then see what the balance is. Oh, I can go spend money.
That's correct. They and a lot of them. On home banking, you can't move from that account. We don't allow it, okay? You have to come in to do it, so it's an extra little, maybe I better think about this, so we like that.
Or I got to face Lynda if I want to pull my debit account. Boom, I'm not doing that.
Lynda's not here, is she? We hear that. No, not really. But so we want them to save at least 3, but I have spoke to you about this many times, and ideally 6 months is the great number. To have.
Yeah, it's interesting that you're looking at income. I look at expenses. I like to see folks budget what their minimum costs are to live and have that 3 to 6 months of expenses covered.
That's great.
So, it's again, you're not necessarily going to save during that time period, but hopefully it's temporary.
Right, exactly.
And then you got to replenish. So
yes, you do, because it does come up. Your car breaks down, your water heater goes out. Those things that everyday life, that happen.
So that goes back to the advice we give somebody who is, wants to buy a house, and maybe they just got a raise, maybe they just paid off debt, they can get used to that payment, is to take whatever that housing payment is and put it into a side account and say, well, I can't put $2,000 or $2,500 or $3,000 a month in that account. Well, how are you going to afford the house? And they start thinking, how about we start with $500? And then, and that does a couple things. It helps them establish money for down payment.
Yes.
It helps establish that safety cushion, and it gets them used to that cash flow going out.
That's awesome.
Now, so.
As you said that, I was thinking when the gentlemen at the plant, and women too, we have a lot of women that work at the plant now also, when they get a raise, we talk to them about putting their raise or a portion of it into that account that they don't touch. because you're not used to having that money. So let's take some of it and put it into the account that you're setting up for that.
Are you seeing much of your membership doing investing? Like, I don't want them to be day traders, but are they putting any money in the S&P 500 or things like that?
They have 401ks at work,
right.
and their employer usually matches them, okay, or 3 or 4%, okay. And that's usually what they do. Then they can diversify it, and I see a lot of them, yes, using. I like it to be more conventional, okay? I'm more of a conventional person, but as you're young, you can do
Your risk
the higher
factors are
risk,
higher,
yes.
right, yeah.
So they are doing that, and they show me that, but we have IRA accounts here for them if they would be want to be more conventional. So we have them here also that we offer, but we do encourage them to put your 4%. If your employer's going to match 4,
it's free
put
money,
4.
and it's not taxed.
Yeah, exactly. You know, as you say that, the school my son works at, it's a private school, and they started the 401k matching the 3%. And he was saying, I can't do 3%, Mom. I said, oh, yes, you can. You'll be surprised. So he did it, and he's just telling me all the time, looking at that, Mom, I've got this now, you know. So he's so excited that he did do that.
Yeah.
So it's just an incentive to us when we do stuff like that. Mm-hmm.
All right. All right, so I guess we're going to kind of wrap things up here. Other than the Bible,
Yes.
what is the best book you recommend for your members to read?
Wow. You gave me a book one time that was very good, but I also know of, I can't think of his name right this moment. He teaches financial, a view from the Bible. Can you think
Dave
of
Ramsey?
Dave Ramsey. I went through the course.
Yeah.
I enjoyed it so much. Taught me so much, okay? That's where I became a different person. I changed and saw, hey, my dad wasn't crazy. You know, he was teaching me these things that he's talking about. So Dave Ramsey is an excellent person, but there was a book you gave me about self-confidence and treating people correctly. So it's the whole person. Do you remember that book that you gave me?
I'm a big proponent of Dale Carnegie, How to Win Friends and Influence
There
People.
we go.
I think
Yes.
that's just,
Yes.
it is timeless. I mean, it was written how many years ago?
Yes. And it's still.
We had the whole office had read it, and we keep going back to that
Yes.
over and over again. It's probably something we need to read every few years. There's a newer, updated version my daughter read where they changed some of the examples, but the original one to me is just awesome. Yeah.
I still choose little clips out of that book and send it out to the employees during the week sometimes. So it's really still helping here, okay? Because I have young people working here, you know, and they need to learn too about their finances.
And are they hitting any common obstacles in that world?
I have one that wants to buy a house, and she didn't have the down payment that she needed, and due to having a baby now, she has expenses that she didn't think she would have, and it's put a little wall up to where they haven't been able to get a home yet, but she's working on it.
Yes.
She's working with you.
Yes.
And I thank you.
And she's making progress.
Yes.
Oh, so cool.
Yes.
All right. So anything else you want to talk about?
That's all I can think of. I just want to thank you again for being there for my members, for being there for me when I called to ask, hey, what do you suggest that I suggest to these people? Or even helping us with our mortgage, even rates, because we don't want to, we're not worried about making the big bucks, you know, to have to afford the place here. But I want to be fair to the credit union and fair to the member too. So you are able to help me with that, and I really appreciate that.
You're always a good sounding board.
Yes.
And very knowledgeable. And sometimes just it's that synergy that produces so much more
Yes,
than
it
the
is.
individual
It
parts.
is.
So thank you for
Yes,
everything.
you too.
Cool. I'll wrap it up.
Okay.